morning. I am Jay Kumar, Assistant Professor, Department of Management Studies, SNS College of Technology. Now I am going to explain about the topic types of working capital. Before looking into the types of working capital, first let us discuss what is an working capital. Working capital is the money used for day-to-day business operations. It is calculated as current assets minus current liabilities. It helps a business pay short-term expenses and debts. Positive working capital shows good financial health, whereas the efficient working capital management improves liquidity and smooth operations. Now, let us discuss about the types of working capital. There are about four main types of working capital. First thing is your permanent working capital. A minimum amount of working capital required continuously for regular business operations, whereas the temporary working capital represents the extra working capital needed during seasonal demand or sudden increase in business activity, whereas the gross working capital represents the total investment made in current assets like cash, inventory, and debtors, whereas the net working capital is the difference between current assets and the current liabilities, showing short-term financial strength of the company. Gross working capital refers to the total amount invested in current assets of a business. It includes cash, inventory, debtors, bills, receivables, and short-term investments. It focuses only on current assets and not on the current liabilities. It helps in measuring the firm's ability to conduct day-to-day operations smoothly. Adequate gross working capital ensures liquidity and uninterrupted business activities. Next, let us see what is a net working capital represents. Net working capital is the difference between current assets and the current liabilities. It shows the short-term financial position of a business. And a positive net working capital indicates good liquidity and the financial stability, whereas a negative net working capital may create difficulty in meeting the short-term obligations. It helps management in efficient capital planning and control. The permanent working capital is the minimum amount of working capital required continuously in a business. It is needed for carrying out day-to-day operations without interruption. This type of working capital remains invested in current assets at all the units, all the times. It does not vary significantly with changes in production or sales level. Cash, minimum inventory, and basic receivables are usually covered under it. Permanent working capital increases gradually as the business expands over time. It ensures smooth and stable functioning of the business organization. The temporary working capital refers to the additional working capital required for the short-term period. It is needed to meet the seasonal demand or sudden increase in the business activities. This working capital fluctuates according to the level of production and sales. It is also called variable working capital. The extra inventory, additional cash, and short-term receivables are covered under it. Businesses usually finance it through short-term borrowings or bank credit. It helps the business handle temporary operational requirements efficiently. So, the slide shows the 8 types of working capital, which can be broadly classified based on the concept and time. Gross working capital refers to the total current assets of a business, whereas net working capital means the difference between current assets and the liabilities. Permanent working capital is the minimum amount required continuously for regular operations, while temporary working capital is the additional amount needed during seasonal or special demand periods. These types helps business maintain liquidity, ensure smooth operations, and manage short-term financial requirements effectively. So I have given some of the real-life case studies and also example of a US company. Now let us discuss about the working capital through the 5 stages of your design thinking. Working capital management can be improved using the 5 stages of your design thinking. In the empathize stage, business understand cash flow and operational problems faced by the departments. During the define stage, the exact working capital issues like excess inventory or delayed collection are identified. In ideate and prototype, new solutions such as faster billing or inventory control methods are developed and tested. Finally, in the test stage, the effectiveness of the solutions is evaluated for improving liquidity and the efficiency. So, to conclude, working capital is essential for the smooth functioning of the business organization. Different types of working capital helps in understanding short-term financial needs and operational efficiency. Gross and net working capital measures the firm's investment and liquidity position. Permanent and temporary working capital helps the business manage regular and seasonal requirements effectively. The proper management of working capital ensures in uninterrupted production, timely payments, and better profitability. Therefore, the efficient working capital is important for maintaining the financial stability and growth of the business. With this conclusion, I'd like to thank everyone for your opportunity. Thank you.